Hello everyone! Today we are going to talk about standard deviation projections. Specifically, I want to talk about different types of standard deviation projections. I want to explain how to apply it to different markets and how we want to trade this in context of market maker model. But before we start, don't forget to subscribe to this channel to not miss new videos that I prepared for you guys. Okay, let's start. Okay, basic explanation of standard deviation is potential target of market maker model. In other words, we use standard deviation to anticipate a zone of reversal or retracement. So there are different types of standard deviation projections levels that I use. We have accumulation to manipulation, we have manipulation to distribution, basically classic manipulation leg, we have impulse leg, time distortion leg, and we have measuring gap. So let's start with accumulation leg. That's pretty much interesting projection, so I don't use this often, but that's good to know so where we can anticipate potential smart money reversal. Okay, let's refresh in our memory what is accumulation. Accumulation is where smart money accumulate position to set up framework for distribution phase. During this phase, price action usually trend bound with low volatility, relatively small price movements. So we see accumulation, basically accumulation is consolidation above, below, or near opening price. In accumulation phase, we see consolidation where a lot of liquidity is generated, and then we see a fake move. We call this fake move as manipulation to clear all liquidity, and then smart money reversal occurs. So basically how it looks like, we got open of the candle, right? Then we got quick fake move down to clear all liquidity that was generated right here, to a fake move, create some liquidity, and then reversal to higher from PD ray. So with this manipulation, we can see formation of wick of the candle. Well, standard deviation. How we want to use standard deviation levels for accumulation phase. In accumulation, the lowest, highest, obvious, invisible range. Most of the time, it will be last leg before reversal. Visible range measured from low or high to the high or low, depends on the direction, will project manipulation. So, range between 2 and 2.5 standard deviation of this last leg, the most obvious invisible leg right here before reversal, is going to be possible manipulation move right here. So we anticipate the end of manipulation here. Once again, we must consider smart money reversal after we reach higher from PD ray. This means that we anticipate to see the range between 2 and 2.5 standard deviation of this accumulation leg inside higher from PD ray. So for example, we can see an example with gold. We got accumulation right here. Then we got move below consolidation, price reach for our sell side liquidity. I use the very last obvious invisible leg before reversal, and I projected this move down. I can see that price entered 4-hour sell side liquidity, which I can consider as higher from PD ray, and this range also was between 2 and 2.5. So I can start considering potential smart money reversal here. Can I trade the move from consolidation? Of course. Yes, you can trade the move from consolidation to the higher frame level or aim for 2 and 2.5 standard deviation range. But what's the best entry for this? The best entry will be the change in the state of delivery or order block. We remember that order block is a change in the state of delivery, change in the state of delivery is order block. So we consider the best entry inside this consolidation using order block that was formed near 50% of this accumulation consolidation. We may see that price may break below, above consolidation, depends on direction, and immediately back to this range. Most of the time, we see this quick retracement back to the range to retest this order block. In other words, change in the state of delivery. And this order block will be formed near 50% of this accumulation. But it doesn't mean we need to wait for this break below, above consolidation to retest this order block. This retest might be inside this consolidation. So for example on Bitcoin, 15-minute chart. So we can see consolidation. Basically, I call this as distortion in discount. So we can see accumulations and price quickly trying to retest 50% order block. We can see quick move down, then continuation higher. We actually broke above this buy side liquidity. We can project last move right here, and this range is going to be the range between 2 and 2.5 is going to be possible end of our manipulation. So we can see formation of order block near 50% right here, and price actually detested this couple of times right before moving us higher. But we still can consider trade from here. We are going to execute this order block with stop loss below consolidation low. I don't use this in my trading, so I don't trade based on this setup. So I usually try to avoid trading inside consolidation, but it's totally up to you. So you can try to trade this. Maybe it will work for you. So next type of standard deviation is going to be manipulation leg, the most common type of standard deviation projections. So what is manipulation? Manipulation is where smart money engineers price moves to create liquidity, right? They do this by running price above or below consolidation accumulation phase, right? In other words, manipulation is where fake move occurs in the opposite direction of height of intermediary. Basically, it's the weak high low of the candle that is developing at this moment. Okay, as I said, the manipulation usually occurs between 2 and 2.5 standard deviation range of consolidation leg projection. But how do I know that this manipulation phase has finished? Of course, we must understand how market maker model works, always. In order to anticipate smart money reversal, basically transition from sell program to buy program, from buy program to sell program, we must reach height of intermediary first. After this, we can switch in lower time frame and look for a change in the state of delivery and lower time frame market structure shift. Also, we can use, of course, SMT divergence as additional confirmation, but as you can see, I put this as optional, so it's up to you. If you want to use SMT divergence as confirmation, great. If you don't want to use this, that's great as well. Okay, higher time frame level must be, not must be, but ideally should be in between the 2 and 2.5 standard deviation range of accumulation leg projection. So when we see that price reach height of intermediary and this height of intermediary right inside 2 and 2.5 standard deviation, at this point we can anticipate more like high probability reversal here. But still, we must wait for lower time frame change in the state of delivery and lower time frame market structure shift to confirm smart money reversal. Okay. Once again, in order to confirm transition from one program to another one, we must have, once again, height of intermediary, lower time frame change in the state of delivery, and market structure shift also on lower time frame. And only after this I can start drawing my manipulation leg projection. Okay, I will use the very last leg before smart money reversal that was confirmed by, once again, change in the state of delivery and market structure shift. This leg will be my manipulation leg, and this range preferably within 2 and 2.5 standard deviation range of accumulation consolidation leg projection. When I use standard deviation projections, now it's important, guys, listen carefully here. I must understand the specific instrument I'm trading at this moment. For example, the projection for ES will be completely different from those that I use, for example, for NQ, DXY, gold, TL, crypto market, forex market. So for ES, I'm going to use completely different projection levels. Okay, ES. I want to see smart money reversal once again from height of intermediary. After I found my manipulation leg, I'm going to use FIB retracement tool with 1, 1.5, 2, 3, and 4 standard deviation levels. Yes, loves rounded numbers. The range between 1 and 1.5 standard deviation will be my retracement range. I will be interested in retracement to the breaker block, and it must be breaker block only. After price reach the breaker block on the same time frame where we measured our manipulation leg, we don't want to jump between different time frames. Same time frame. I expect to see continuation of the move to the 2 standard deviation. And this level is going to be key level for us. We are still below above high time frame PDRA. This means with this move up, for example, the 2 standard deviation price still did not reach high time frame PDRA. I will consider 2 standard deviation as my partial level, and I will aim for 4 standard deviation at this point, or high time frame level. If high time frame level a little bit below 4 standard deviation, that's fine. I'm going to close my trade at high time frame PDRA, high time frame level, not at 4 standard deviation. At the range between 2 and 3 standard deviation, I will expect to see another retracement. Once again, I will consider retracement from this range only in case ES still did not take high time frame PDRA. So I will, from this range between 2 and 3 standard deviation, I will expect to see another retracement to the fair value gap that was formed around 1 and 1.5 standard deviation. And once we reach this fair value gap, this is where I will be interested in moving my stop loss. At this point, I will aim for 4 standard deviation, or I will aim for high time frame level. So here's example of how what levels I will use for ES. Once again, for ES only. So this is example from one of my live streams. So just highlighted for you, but it was called in live. So what we can see here, we reach high time frame level right here. So we got high time frame level. We wait for change in the state of delivery. We wait for market structure shift, and only after this I can start drawing my manipulation leg, right? So I use the very last leg before smart money reversal. This means I use this leg. So let's see what happened right here. At the range between 1 and 1.5, I want to see a retracement. Retracement where? To breaker block. Here we go. I can enter long right here with stop loss below sell side liquidity. Not here, but below sell side liquidity only. Entry is going to be based on breaker block once again. With this move up from this breaker block to this 2 standard deviation, we can see we're still below high time frame level. Well, perfect. I will take my partial right here at 2 standard deviation. Next, what we want to anticipate between 2 and 3 standard deviation, I want to see retracement where? To the range between 1 and 1.5. Between this range, I would like to find fair value gap. This means I will try to enter the fair value gap that was formed between 1 and 1.5 standard deviation. And as I said already, I'm going to move my stop. So my second entry, or for example, I can add to my positions right here, is going to be this fair value gap. As we can see, this fair value gap was formed right between this range, right? And I'm going to move my stop loss to the nearest sell side liquidity, which is right here. And I'm going to aim for what? For standard deviation or high time frame level. Since high time frame level on ES was exactly the same level with 4 standard deviation, I could close at 4 standard deviation. Once again, this is not HINDSIGHT chart, it was called in my live stream. Here's example on ES as well, weekly chart. What we can see here, we created all-time high. So the last leg push up before smart money reversal was right here, not right here. We got slightly retracement, then continuation. So I use this leg as my manipulation leg, right? So the range between 1 and 1.5 is going to be considered as retracement range. Retracement where? To break a block. Here we go. We got first move right here. So I'm going to enter this break a block with stop loss above buy side liquidity, right? And I'm going to take partial at 2 standard deviation. Here is an example when we have weekly first body for price to go lower with weekly fair value gap, which is right above 4 standard deviation. This is the case where we are going to aim for high time frame level, but not 4 standard deviation. With this move down, we did not get 2 standard deviation. We still wait. We got move up again to take this buy side liquidity. Actually, it offered what? It offered absolutely amazing first stage of distribution that was explained in my market maker model video, right? With this move, it offered what? Time distortion stuff, but we are going to talk about this within Q. So the test of breaker block, Stop loss still above buy-side liquidity. We anticipate to get moved to 2 standard deviation. Perfect. We might take partial right here. We might try to hold our trade. So what we want to anticipate between 2 and 3 standard deviation. Last move before reaching higher frame PD ray. Perfect. I want to find fair value gap that was formed between 1 and 1.5. Nice. We got this fair value gap and this fair value gap. Of course, I'm going to use this fair value gap first, and I'm going to move my stop loss. For example, if I add it to my position from here to the nearest buy-side liquidity, which is right here, I can enter right here, put my stop loss right here, and aim for higher frame level. For example, if I miss this trade, it's totally fine to use this fair value gap still within this range with the same stop loss at buy-side liquidity, nearest buy-side liquidity, and aim for higher frame level, but not for standard deviation, because higher frame level was slightly higher than for standard deviation. Obviously, we want to close our short at higher frame level. Okay, foreign Q, DXY, gold, oil, and any other instruments, I use it in a bit different way, as I said before. Same idea with manipulation leg confirmed by lower time frame change in the state of delivery market structure shift. But my interest in standard deviation level will start once price reaches the range, now important, between 2.25 and 2.5 standard deviation. This range is usually a part of second stage of reaccumulation or redistribution. This means that we will expect to get time distortion at this range between, once again, 2.25 and 2.5 standard deviation. And this time distortion setup at this range between these two levels will be final setup for us to finish market maker model. Between 2.25 and 2.5 standard deviation, I want to see consolidation. Basically, time distortion is a consolidation that finally will offer a run below, above this consolidation low or high. With this run, I will wait for inversion fair value gap formation to enter my trade as a part of second stage of reaccumulation or redistribution that I already mentioned above. Ideally, this run above distortion, high or low. With this run, I want to see retracement. For example, if we run distortion low, I want to see retracement down to the fair value gap that was formed between 1 and 1.5 standard deviation. Don't worry, I'm going to show you the picture. So here's the projection levels, not for ES, but for any other instruments. So we got confirmed higher frame level, we got lower time frame change in the state of delivery and market structure shift. I'm going to use the very last leg before smart money reversal, right here. As I said already, my interest starts at the range between 2.25 and 2.5 standard deviation. Right here, this is where I usually consider time distortion begins. I would like to see consolidation when price, then I would like to see break below consolidation low. Below consolidation where? To the range between 1 and 1.5. This means between 2.5, between 2.25, 2.5, I would like to see retracement back to the range between 1 and 1.5. Ideally, I would like to see fair value gap between this range, between range 1 and 1.5. And at this fair value gap, of course, I can enter my long trade with stop loss nearest sell side liquidity level right here, and I'm going to aim for higher frame level or for standard deviation, but I usually call this as aggressive entry. Best setup is going to be based on inversion fair value gap. Once we broke below distortion low and entered this range between 1 and 1.5, specifically we entered the fair value gap between this range, I want to see the very first fair value gap that broke at the leg that broke this distortion low, and I'm going to wait for inversion fair value gap formation, and I'm going to enter this inversion fair value gap, and I'm going to aim for standard deviation, ideally for standard deviation or higher frame level. Here's an example. So here's an Q chart from last week. We can see I use this leg right here. With each higher frame level, we got confirmed change in the state of delivery market structure shift on lower time frame such as 15-minute chart. So very last leg before smart money reversal was right here. As you can see, I projected move from this consolidation last leg. From this low to this high, we got exactly 2 and 2.5 standard deviation. After this, I use this leg to project my manipulation leg projections, right? My India starts right here at this time distortion between 2.25 and 2.5. Perfect. We're consolidating right here, right? What I want to wait? I want to wait for the retracement to the range between 1 and 1.5 standard deviation, ideally to the fair value gap. So we can see price retraced all the way down to this range between 1 and 1.5, and then continue going higher to 4 standard deviation. Once again, guys, it's not HINDSIGHT chart. This chart was posted in my Discord. As you can see, it was day before it happened. I call this as retracement area. I anticipate to get this retracement, and I call this as my 1 hour target right here. 4 standard deviation. So absolutely amazing delivery right here with this move, right? We got this move down from this range, time distortion range, where the 1 and 1.5 standard deviation range, specifically to this fair value gap. And then sharp reversal to offer distribution right here to 4 standard deviation. From our deal distribution lesson, we also can see absolutely amazing deal distribution setup, right? Right here. Absolutely amazing delivery. So this is a chart that was posted in my Discord. Okay, good invalidation sign of this manipulation leg for me is when price left the range between 1 and 1.5 standard deviation after it retraced from 2.25, 2.5 standard deviation range. This means once we, for example, retraced from this range all the way down to this range and price keep breaking below this 1 standard deviation, this means most likely I want to invalidate my manipulation leg, and most likely we will get a reversal already, not a retracement. Okay. Once again, the invalidation also comes from height of intermediary. What do you mean by this? This means height of intermediary is much more important than standard deviation, obviously, right? If price reach any height of frame level, say it was 1.5 standard deviation and reversed, we must consider potential smart money reversal from that level, even if it was just reversed from 1.5. Once again, height of frame level is much more important than standard deviation levels. Here's example in Q. So we reach breakaway gap on 5 chart, on 15-minute chart. So I want to consider this move right here, right? I want to project from here to here, and we can see that we entered 1 hour fair value gap right here, and basically reversal was from 2 standard deviation. So that's why it's important to consider height of intermediary first. Okay, time distortion. Interesting projection right here. I use this also pretty much often, so it's good to know how to use this. Okay, what is time distortion? Time distortion is a price consolidation. Consolidation is time distortion is consolidation. As I have already said, time distortion will be a part of second stage of reaccumulation or redistribution. One common mistake we make is thinking that price is offering market structure shift, and we look for a trade considering this as, let's say, 2022 model, but instead we see fake move down or up, break below distortion low or high, and then reverse and deliver to higher from level to complete market maker model. Okay, here's an example from yesterday. It was also called in my live stream, and I even asked my members if you see this as 2022 model or this is potential time distortion. That was kind of interesting because 20% of answers was like a 2022 model, but it wasn't. So this means it was called live as well. We can see we entered this range between 2 and 2.25. Actually, let me open next slide. This range, right? We started consolidating right here. What I want to anticipate, price breaks below distortion low, creates what? Inversion fair value gap. Also, we entered fair value gap right here, and then I would like to wait for reversal. I would like to see this fair value gap, the very first fair value gap at the leg down that broke this distortion low as an inversion fair value gap, and I want to enter long to complete what? Market maker buy model here. Here we go. As we can see, we respected this fair value gap, absolutely amazing reaction here, absolutely amazing inversion fair value gap right here. Everything was amazing, so it was called as well. Boom, entry, stop, Stop loss is going to be below this sell side liquidity, not this, not this, not this, not this, but this liquidity level. At the leg down that broke distortion low, so it creates sell side liquidity. We are going to place our stop right here. Our entry is going to be based on inversion fair value gap. We are going to aim for higher from level or forced standard deviation. Important to understand that with this time distortion, we see market makers accumulating long shorts to complete the move. You will notice that most of the time we will see that price is slowing down near this range between 2.25 and 2.5 standard deviation. This is where we don't need to feel the FOMO, right? Much more important is to understand that time will offer and will deliver us to the higher from level. We must wait for the break below above distortion to consider the trade. Here is the picture. So we consider possible price slowing down right here, starting consolidating between 2.25 and 2.5 standard deviation levels. We wait for the break below distortion low, and ideally we wait for the break retracement down to the range between 1 and 1.5. Between this range, we want to find the fair value gap. Once again, it's okay to enter this fair value gap with stop loss with nearest like sell side liquidity. But once again, once price breaks below 1 standard deviation, this means price breaks the range between 1 and 1.5, we can start considering invalidation, right? But once again, this fair value gap is going to be aggressive entry. We wait for safe entry. Safe entry is going to be the very first fair value gap at the leg down that broke distortion low, right here. We are going to enter the inversion fair value gap. You probably want to ask, do I need to wait for the test of inversion fair value gap? Nope. You can enter at the very next candle that actually closed above this fair value gap. At the open of next candle, stop loss anyway will be right here. Okay, let's see. Once again, this example on Bitcoin, 1 hour chart. We can see very last leg before smart money reversal right here. I projected move. Here we started consolidating distortion. Then price did what? Broke above distortion high, entered this range, specifically this fair value gap, and offered what? Inversion here. Inversion. Actually, we can use this inversion, we can use this inversion. I actually highlighted 2 fair value gap because this fair value gap is pretty like small fair value gap. It's okay. I'm going to enter this inversion with stop loss above buy side liquidity, and I'm going to aim for forced standard deviation or higher from level. Now we know that time distortion usually occurs near 2.25 and 2.5 standard deviation range of manipulation leg. If price still below or above higher from PDRA, we will get retracement from this range between 2.25 and 2.5 standard deviation. If price reach higher from PDRA, we will get reversal from that range. Keep this in mind. This retracement will deliver us to the range between 1 and 1.5. Ideally, we want to see price reaches fair value gap inside this range, right? Once we got this break below, above distortion low or high, we consider this as another manipulation. Basically, we consolidating, then we break below distortion low or high. So it offers manipulation. This manipulation will be a part of second stage of reaccumulation or redistribution. I want to use entire leg down or up that broke distortion low or high and project 2 standard deviation move from there. Most of the time, these two, listen carefully right here. Most of the time, this 2 standard deviation move which was based on time distortion leg will line up with 4 standard deviation of manipulation leg. But I personally use this as additional confirmation of my target. So, same example with Bitcoin. 4 standard deviation right here. I projected entire leg right here that broke distortion high, entire leg right here. And as we can see, 2 standard deviation of time distortion lines up with 4 standard deviation. It's up to you. You want to aim for 2 standard deviation of time distortion leg. You want to aim for 4 standard deviation of manipulation leg. Once again, or we want to aim for higher time frame level. But when we are going to aim for higher time frame level, always, if this level is slightly higher or lower, depends on direction. At this point, if the sell stops was above 4 standard deviation or 2 standard deviation, of course, we are going to close at the sell stops. Impulse leg. Interesting projection right here. I don't use this often, but I use this. So let's cover this. Impulse leg projection is just conservative projection, and I use it when we have pretty big manipulation leg. Sometimes I see huge manipulation leg, and I'm like, well, it's impossible to use this leg for example, for the same day, right? Most likely delivery will be next couple of days. I use the very first move up or down, depends on direction, after smart money reversal. So this move, I'm going to measure the very first move, for example, up before first retracement. After this, I measure this move exactly the same way. This means I use exactly the same levels that I use for manipulation leg. But you will not see time distortion at the range between 2.25 and 2.5. Most of the time, it will be near 1 and 1.5 standard deviation of this impulse leg. This is where you will see formation of first stage of accumulation or distribution. Once again, I use this only in case I see that we have pretty big manipulation leg, and since I'm not swing trader, right, I look for the conservative targets that will be realistic for the same day. For example, NVIDIA chart, pretty huge manipulation here, right? Of course, I don't want to use it for the same day trade. I want to use this. Boom. This is my impulse leg. Here I can see formation of possible distortion right here. Break below distortion, I'm going to enter this fair value, inversion fair value gap with stop loss right here. I'm going to aim for standard deviation. Exactly same levels that I use for manipulation leg. But when we have pretty big manipulation, I use impulse leg. One more example, pretty big manipulation leg. I'm going to use impulse leg, right? We actually can see slightly like consolidation right here, but we cannot see distortion. It's okay, but we see that price reach what for standard deviation. Perfect. Once again, I don't use this often, but it's good to consider when we have pretty big manipulation leg. And last one for today is going to be measuring gap. What is measuring gap? Measuring gap is the fair value gap that was formed at 50% of implied range. This fair value gap typically appears as pretty big fair value gap. So we can call this as liquidity void. Not often, but we see this, usually we see this as liquidity void. Once again, not always, but most of the time. I usually consider the projection of measuring gap as my target of market maker model. Exactly as we use for standard deviation, for example, based on manipulation leg. Once again, the measuring gap is a fair value gap located at the midpoint of implied dealing range. And this is a part of second stage of reaccumulation or redistribution. To get measuring move, I use the low, high, where smart money reversal occurred, right? Along with the top bottom of the measuring gap, fair value gap. The 100% this projected move from this measurement becomes my target for market maker model. Usually we want to see this fair value gap as unfilled fair value gap, but I am okay to keep this measuring gap, this fair value gap valid even when price tested this, but it must be institutional order flow entry deal. What do I mean by institutional order flow entry deal? This is a fair value gap. For example, if you consider bullish fair value gap, I would like to see price, for example, testing this fair value gap, but I don't want to see it touching the 50% of this fair value gap. Everything above 50% considered as institutional order flow entry drill. For example, it's okay to use this, so we can see this fair value gap at the middle of implied dealing range, possible range that we anticipate to see, right? And I'm going to measure from this low to this high. It's okay to see this price actually traced to this fair value gap, but still above 50%, same measurement from low to high to the top of this fair value gap. And entire projected move is going to be my target. Well, example. See, we got institutional order flow entry deal, absolutely valid measuring gap right here. I'm going to measure from here to the top of this fair value gap, almost to the tick projected move. And last example. We got this high and this bottom of this fair value gap. This fair value gap untested, perfect. So we are going to project this move from, once again, from the buy side liquidity to the bottom of this fair value gap. And projected move is going to be right below mean threshold of daily change in the state of delivery. Okay, just log into my account in FX Replay. So we are going to backtest some standard deviation projections. Okay, let's enter account balance, completely new session. So it's not hindsight, so we don't know what is going to be. Let's choose DXY. Yeah, let's choose gold actually. I don't trade gold at all, so it's going to be interesting. Let's choose, I like November 4 from last year. This current date. Perfect, let's start. Okay, nice. What I can see here, let me, it's weekly chart. Okay, let's take actually on weekly chart. I don't really care. Okay, we're at all-time high right here, right? We got sweep, I like it. What else? We got, did we get actually OT retracement? Oh, here we go, we got OT retracement. Also, we're on this internal sell side liquidity, right? Okay, perfect. Let's switch on weekly chart. So what I can see here, with this move down right here, I can see failure swing. So basically it failed to offer new low. It never actually took out previous candle low. It's kind of bullish sign for me. Well, perfect. Now I'm going to highlight manipulation leg, the very last leg before smart money reversal. This is right here. Manipulation leg. I actually like it. Let me remove OT retracement. Nice. What else can I see here? I can see it formed. Yeah, basically it formed change in the state of delivery right here. Do I have template? Oh yeah, I have template for this. Perfect. Nice. With this move right here, I can see they offered first stage. So we got low disk buy right here. Also, I can see this as first stage of accumulation. First run on sell stops, basically turtle soup from here. Formation of short, intermediate low, short-term low, move higher. Well, since this is not a yes, I'm interested in the range between 2.25, 2.5 standard deviation. So basically distortion range. Distortion range. Time distortion. Nice. Well, I can see it ejected so far. Ejected from this range all the way down to this range between 1 and 1.5. Love it. Absolutely love it. Okay, if they will keep holding this sell side liquidity, I'm going to consider another long trade. So we also have this fair value gap right here. I don't care if it was closed. I do care about this liquidity level. Okay, let's. Oh, I don't have weekly. Okay. And if it may hold this sell side liquidity and invert this fair value gap, I'm going to consider actually long from there. Let's see. Oh, perfect. I like it. Long trade from here. Stop loss right here. I'm going to aim for first deviation at this point. So this is based on a manipulation leg. Also would like to add projection for time distortion. Time distortion. Oh, lines up. As I said before, two standard deviation of time distortion and 4 standard deviation of manipulation leg usually close to each other. So I'm going to put somewhere in the middle. Nice. Let's place the order. Let's risk 2% of account, right? Actually 2. Nice. We don't care about numbers right here, about money right here. We do care about this trade. It almost TR trade, so I like it. Yeah, let's execute actually. Let's see. I'm in. Once again, once we break a distortion high right here, I'm going to move my stop. Time distortion high. Oops. Time distortion high. I like it. Well. That's weekly chart, so if you don't care about time frame, it works everywhere. Let's see. So far, so good. I like it. Still actually inside this range. I'm going to move my stop right here. Well. So far, so good. Let me remove projection, so. I like it so far. And here we go. Perfect. Absolutely amazing delivery. I like it. Went even higher than our projections, but here how it works. So actually we trade second stage of the accumulation right here. Absolutely amazing. We got first stage. So confirm first stage with move and sell stop, start also. We got change in the state of delivery. We got move from 2.25 and 2.5 standard deviation range all the way down to the range between 1 and 1.5. Amazing. This fair value gap. Actually, I could enter this fair value gap. No problem with this. Stop exactly same. The sell stops. As you can see, never actually run below this liquidity level. Absolutely amazing delivery. We entered this inversion fair value gap, which works for time distortion idea, right? I like it. Absolutely amazing delivery. We got almost 3-hour trade. Good risk management right here. Yeah, here how it works.